Welcome back to Everything Money. In this video, you will learn about our thoughts about the wholesale market that is Costco. We'll go over the financials using our software. We'll show you the numbers, and we'll use our stock analyzer tool to help you rationalize what you should be paying for Costco moving forward. If you want to trade Costco at a quicker pace, Mo will show us all the charts, all the trends. But first, why should you watch this video? I bring your questions about Costco, why Manish Pabrai loves it, why Warren Buffett loves it. I'll bring you these questions to a couple guys who own and operate over $100 million in real estate, multiple businesses upstairs, and stocks, and they will give us a mindset about how to invest into a company like this. Paul, what are your thoughts on this? I know you love Costco.
All right, guys, so first off, follow us on Instagram. Everything Money Investing is our new Instagram account. And then follow us personally so you can see pictures of our cute dogs, including the one that Mo's girlfriend has that Mo wants to kill. So, guys, this is our Everything Money software.
He almost died.
He almost died.
He almost died this weekend.
Good news for you, I assume?
You know, it was funny because I was sitting there and I was like petting him and I was like, God, I feel bad, but it wouldn't be the worst thing in the world.
Oh, my God. I hope Nicole does not see this video because she will dump you.
She won't see this video. Plus, she knows.
Go ahead, Paul.
All right, guys, this is our exclusive Everything Money software. Let's go to the 8 Pillars tool.
Do you shop at Costco?
I do like Costco.
Yeah, I knew you did.
Costco's great. You go in there, you save money on gas. All right, so look at this max chart for Costco. Ready?
Seems like a totally normal company, and then bam.
$6.58 in 1987, when my brother was born. 1989, sorry. My brother was born in 1989. It was $12 stock. All right, so guys, let's start out. $243 billion market cap for Costco. 5-year PE. Our first pillar is we want the 5-year PE to be under 22.5. It is 66.
Smidge high.
That's an X. Number 2, we want the 5-year return on invested capital to be greater than 9%. It is 15.4. That is a check mark. So this says they do a great job of investing the capital that is invested in the business through debt and equity. So that's a great thing. Munger loves this company. Buffett loves this company. Manish Pabrai loves this company because they do a great job of having a good customer experience. Now, guys, keep one thing in mind, though. They have a special dividend they did, and that's what we just looked up. Because I was like, they can't afford this dividend. The normal dividend is 0.5%. 0.5% of 250 billion is 1.25 billion. So what you do is, don't just trust the dividend is affordable. You got to look at their average free cash flow. The last 5 years is 4.36. Last year was 5.37. They can easily afford that $1.25 billion dividend. So that's good, okay? So far, we have 1X on the 5-year PE and 1 check on the 5-year return on invested capital. Pillar number 3. We go to the income statement of our exclusive software.
Yeah, revenue growth over the past 5 years.
Correct. So we go to 5 years ago, 129 billion. Last year, 196 billion.
You must like this nice slow growth, Paul, over the past decade.
I do. But what do I always ask about retail?
Well, I'm looking right now. I pulled up the 10K in our Everything Money software and got the comparable sales. Last year, net sales increased by 18%, driven by 16% increase in comparable sales and sales at new warehouses. So their same-store sales are going up.
Yep, they are. And I think gas prices drove a little bit of that, but I think gas prices, even without gas prices, it's still been a lot, 11%, I think I read, same-store sales growth. Because gas prices go up, they have a lot of gas there, people go there for the gas, okay? So pillar number 4, we want net income growth the last 5 years. So we slide down the income statement, right down here, net income, last year 2.68, sorry, 5 years ago 2.68, last year 5 billion. Seth, look at the slow and steady.
Just like the tortoise.
Look at the slow and steady. Guys, this is what I love. This gets my...
Oh, boy.
Nards pumping.
Undercarriage heated?
My undercarriage heated would be the great word. I mean, this is... Because to me, this is exciting. To the average person, this is boring as F.
Yes.
But to me, I ask you a question, guys, out there. Would you want your income one year to be $1 million? Next year, you lose $500,000. The following year, you make $500,000. The next year, you lose $2 million. I like steady, consistent. I can plan my life better. Same with my investments. I can plan my investments better when it's slow and steady growth.
There's some sort of strange fandom around Costco, too. Like, people really love it. It's like, I did an engagement session. I'm a photographer. I did an engagement session at Costco.
Please tell me you're joking.
You didn't.
It's hilarious. They're eating ice cream. They're getting pizza. They're going to the stores.
Awesome.
It was hilarious. And Costco loved it, too. So,
I bet
by
they
the way,
did.
go ahead.
I bet they did love it.
I got to hire you to protect my dogs.
Oh.
At
and my
Costco?
significant other at some point.
Oh, how
Should
nice.
we go to Costco and put them in the dog beds? In the cage?
Are there dog beds at the...
Yeah, they have that big cage thing, and then they throw all the beds in there. We just put them on top of there.
Howard will die. Pillar number 5.
Shares outstanding, Paul.
So, guys, this is the silent killer on investing. What happens here is we want to make sure that their shares outstanding are staying the same or decreasing. Why is that? Well, if a company is issuing more shares, they're diluting you as an owner. Let's say a company has 100 shares outstanding. You own 10 of them. You own 10% of the business. If they all of a sudden increase their shares to 150, you still own 10 shares, but now out of 150. Instead of owning 10% of the business, you own 6.6% of the business. That is the reason why shares outstanding is very important. Same way, though, if they're buying shares back, they're increasing your ownership. So this is important. We go back to 5 years ago. 437 million shares outstanding, 443. That's an X. Not by much, but it's still an X. And I will say, when companies are very expensive, issuing shares isn't a terrible thing. They're going to sit there and say, wait a second, the market's very irrational right now. People want our stocks. We have the best crack cocaine on the street. Let's just give it to them. And that's all that's happening here. So why take on debt when you can just issue shares to people who want them at very high valuations? So I get it for Costco, but the great news is they haven't issued many shares. So pillar number 6. Now this one has to do with debt, guys.
Yeah.
So very simple. We go back to the main page of our exclusive software. We go to the 5-year average free cash flow, $4.36 billion. We multiply it by 5 and we get $21.8 billion. We want their total long-term liabilities to be under $21.8 billion. So what do? We scroll to the top of our exclusive software. We go to the balance sheet.
Give it to me now.
We scroll all the way to the bottom. Total long-term liabilities, $11.75 billion. Half of the number, basically. So that's a massive check mark. Last 2 pillars, Sethy. You know how much I love my cash flow.
Free cash flow growth over the past 5 years will show you the free cash and determine what market cap or what we want to pay for Costco as a whole. Go ahead, Paul.
And that we'll do through the stock analyzer tool, by the way, also for an exact price on the stock, which will come very shortly. So we go to the cash flow statement in our exclusive software. Now, guys, free cash flow is cash from operations less your capital expenditures. You can do one of 5 things with free cash flow. Buy back shares, pay down debt, make acquisitions, invest back in yourself, and pay dividends.
Almost
my
got you.
Lord, I almost
yourself.
screwed it up.
Keep going.
So with those 5 things, what matters most is the free cash flow. So we have cash from operations less your capital expenditure. Your Uncle Paul,
Look what he did.
who loves you so much, and he hugs you so tight at night while you're asleep and don't realize it.
Yes.
I added this line to the free cash flow statement. That way it makes it very easy for you to do. So 5 years ago, we had $4.2 billion in free cash flow. And this last year, we had 5.37. That's a check mark. Our final pillar number 8.
I can't stop envisioning you just like in the dark, like creeping in like the Grinch and cuddling me at night. Because of free cash. Because you put in a free cash flow line.
So there's a friend of mine, a friend of mine's mother is a judge. And, as being a judge, sometimes you get death threats. But she's a very funny person. Like, she likes to make jokes. So I wanted to do something where she has a youngest son. I was going to work with him and say, hey, let's call him Billy. Billy, we're going to stage something where you're sleeping. I'm going to take pictures of you. And then just like sleeping and curled in you, and then I was going to send the pictures to your mother and just say, I'm closer than you think. And then I told her other son this, and he was like, do not do that. She will freak out. It'll be bad. And she's a very funny person. She likes to make jokes and stuff like that. But he's like, no, that's too far for her.
You ever tell her?
What?
You ever tell her?
No, I haven't. I should tell her. I should tell her. But anyways, she would probably be like, yeah, Paul, I would have killed you, but that's funny.
Free cash.
So what we do now for our final pillar, we want to come up with some sort of idea of what price to pay for the company. This is not set in stone, guys. But this is a starting point. Because remember, a faster growing company you should pay a higher multiple for. But we just picked 20 as a starting point for free cash flow. So we take our 5-year average free cash flow of $4.36 billion, we multiply by 20. We get $87.2 billion. Versus
$243 billion.
$243 billion. This is a massive X. So we need the stock to fall almost in 2/3. But remember, what was our 5-year PE?
65, was it?
Yeah, 65, Mo.
If you drop that by 2/3, you're at like 20. So for a high return on invested capital, a great company that's growing consistently, it seems about right. So let's go to the stock analyzer tool, the most famous part of our exclusive software, to get an exact price to pay. Do any of us doubt that Costco will be around in 10 years?
Not at all. Yeah, it's great.
So we're going to select 10-year analysis, low, middle, and high. Revenue growth. Hit me straight, guys. So the last 10 years, it did 7.9%. Last 5 years, 11%. Last year, 17.5%. Mo, give me some revenue growth numbers.
8, 10, 12? Is that too much? 12
I'd
too
probably
much?
go a little bit lower. I'd probably go 10 on the high side. So 8, 9, 10?
I was thinking 6, 8, 10.
Okay.
Because think about it. If they did 7.9 and they're much bigger than they were 10 years
That's
ago.
true. It'll be harder to grow.
6, 8, 10.
Yeah.
Profit margin, 2 point.
Yeah, 2.
I'm almost inclined to just leave it at, just put 2.5 and just go straight across.
Yeah.
Okay, let's just go 2.5 all the way across. Free cash flow margin, same thing.
Same thing.
Okay, PE. Now, guys, last year's PE is 49. Last year's price to free cash flow is 45. Guys, these PEs and free cash flows for mature companies are unreasonable. Where's the growth coming? I mean, we're talking about 6, 8, and 10% growth in the company. So what PE are we applying to this company?
12, 14, 16?
14, but it has
16,
a higher
18.
return on invested capital.
14, 16, 18?
I was thinking 14, 16, 18. Do you think that's reasonable?
Yeah.
And the reason being is they have a high return on invested capital. They have a great brand. They have a great customer experience.
You know, it's funny. I was going to say 14, 16, 18. Then you said the thing about their growth, and I was like, all right, 12, 14, 16.
But
That's
I actually
too
think,
low.
but look at their growth compared to like Walmart. Their growth is higher than Walmart.
Yeah.
So I look at it going, okay, 14, 16, 18
Same
seems
for free
reasonable.
cash.
And guys, like usual, I do 12.5%. The reason being is you can invest in an ETF and get 9 to 10%. So give yourself some reason to buy an individual stock. Go 12.5%.
If this sounds too conservative, you have to remember is we want a deal. We don't want to pay just top dollar for these companies. We want to find a great company and then wait till it's on sale. Go ahead, Paul.
Yep. So hit analyze button. So the stock price is currently $5.49. This is going to be ugly. There's no way it's not all red.
Like 170.
Yeah, it's probably
Actually,
around
the
there.
low end is 165.
Good
The
job,
high
Seth.
end is 256, with a middle at 206. Guys, and this makes sense.
So you need to pay $206 for this stock today if you want to make 12.5% return every year for 10 years.
And assuming these middle assumptions, 8% revenue growth for the next 10 years and a 16 multiple on the stock. So that's, even though Buffett and Munger and Manish Prabhai love Costco, they don't love it at any price. They love it at a reasonable price. This is not a reasonable price. As we'll see here on our 8 pillars tab, it does all the math for you guys. Look at this. Apart from minor shares outstanding, which doesn't bother me at all, it's all about the value. It's all about the valuation. It's just way too high. The rent is just, the value is just so damn high. The valuation is just so damn high. I don't get this. This doesn't make any sense to me, but Costco is the kind of company I'd want to have in the future. And I love the fact they only have 840 locations or something. It's not some, I mean, Walmart has like 11,000 locations. Mm-hmm. Now, that doesn't mean you can't make money off Costco. You can trade Costco. Take it away, Seth.
We will ask Manish Prabhai why he loves Costco, if he still loves it, because we get to interview him here in a couple weeks. Paul, tell us about, before we get to Mode Trading, Paul, tell us about the software behind you.
All right, thanks, Seth. So guys, we created the software because our users kept requesting, how do we do our own research without waiting for you to make your own videos? So we spent lots of money, created the software. You get everything you already saw in the video. You get all of this content right here, which includes 30 years of financial data, access to Seth Mo and I. You get it all on your mobile phone. This entire website, everything you've seen on your mobile phone. You get the stock analyzer tool. You get real estate calculator, retirement calculator, all the extra additions. You get our 8-pillar portfolio, exclusive daily content, 2 or 3 videos a day from Seth Mo and I on separate topics. But most importantly, guys, you get access to over 6,000 people are current active users of our software. They're in a chat that's very organized with multiple rooms about different topics. You can talk to them about all your investment ideas, tell them your ideas. They give you feedback. You have actual discussions because most of the people are like you out there who didn't have others to talk to about investing. Now you do. This is wonderful. It's only 90 cents per day. Less than a cup of coffee, guys. 90 cents a day. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, this will lead to hundreds of thousands, if not millions of dollars in extra wealth when you retire. 90 cents a day, guys. 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is you get no sales tax charged to you yet because we're not big enough. So sign up, you get access within minutes, 90 cents per day.
Thanks, Paul. If you want to trade this at a quicker pace, Mo, what's going on with those charts and Costco?
This is a unique company because it's good to trade from a long-term perspective, a daily perspective, and a day trading perspective, which is rare. So look at this chart. I mean, this is incredible.
How perfect this is.
This is the definition of a power stock. So it's a stock that goes through the sweet spot and it continues to climb. It's over all 4 major moving averages, goes sideways here, and it just keeps making new all-time highs. And it made a new all-time high yesterday. So this is a power stock. These are companies that you want to look for. I'm going to come over here. So if you want to, I'll tell you what to do here. I wouldn't be adding to this until you make a new all-time high. But even if you do, make sure you're using stops, because this has been going for a very long time. Now, let's look at it from a daily perspective. You don't want to sit in something for a long time. Just swing trade it. Come and grab these little runs that it makes. Well, this runs for 15 days in a row. But you can just stay in this until it drops below into the sweet spot, take your profits right there and move on. So there's different ways that you can approach this. Now, Seth, I can't believe this one. This one surprises me. This is a 15-minute chart. So each one of these candles that you see is a 15-minute period. So it's taking those ones that I just showed you and opening it up. And what this is doing is showing you every time that you're over 80%, you can get some kind of run on it. You wouldn't think that a company that is $550 a share would make these kinds of runs, but it does. And you can find them here and there. I mean, yesterday you could have day traded this the entire day, entered around 550 and exited around 558, 560, somewhere in that range. So there's different ways to approach this. Costco is a great stock to put on your watch list for any situation. So if you want to learn how to trade with me, come and join me in the Bid and Ask Nation. I give you the Trading 101 series, which is all the rules that will teach you everything that I just said. The Employed Trader series, which is 6 stocks that I go through every single day from a long-term and swing trading perspective. My monthly seminars, which one I'm doing this Saturday morning, and the Bid and Ask Discord community of 900 people that all want to trade just like you.
That's our take on Costco. A bit overvalued at the moment. When it gets back into our sweet spot, we'll certainly update you moving forward. Everything else looks great, Paul, besides that valuation. Yep. So patiently wait for that great bet. All right, that's our take. Fondle thumbs up. Join the community. We'll see you next video.